G'day folks, Jim here from FX Charts, Monday the 17th of March. Thanks for tuning in. Markets are holding up reasonably well so far, first thing in early open trade this morning after the vote in Crimea. The 93% or 95% swing to staying closely tied to Russia really hasn't had too much effect, and the euro is actually surprisingly resilient. I think it's opening this morning roughly where it closed on Friday, above 139. We've seen a little bit of a move south in the Aussie, but that's holding 90 cents so far. And the yen, which is the safe haven currency for all these things, is holding above 101.20. So we'll go and have a look at the charts. And the euro, as you can see, is trading at 139, so 10.15 at the moment. Surprised me a little bit, really. I didn't think the market would go into the weekend holding euro positions, but it seems the market was pretty much unfazed. Now, 139.37 was the high on Friday, and then we've got the previous high up here, 139.66, which is a 2-year high. The hourly charts are actually looking a little bit positive. The 4-hour charts, not quite so sure. We've got some bearish divergence here, so I think it's going to remain a fairly choppy day. I'd be surprised really to see the euro go too much above 139.5, which is the 50% pivot. If we go out and have a look at the longer term charts, I need to go to the weeklies here. Now it's a bit messy, but this here 139.50, that's 50% pivot of this whole move down, as I said last week. But if we do go through there, then as I say, or as I've said previously, there's not an awful lot of resistance to stop us going up to 142.40, which is the 76.4% FIBO retracement of this move down here. So while I think 140, the figure, is going to be well protected by option sellers, a break above 140 I think could see a real acceleration higher. On the day though, I'm not sure that this will be it. Perhaps we have to wait till Wednesday. We've got the FOMC meeting on Wednesday, and depending on Janet Yellen's outlook for the US economy, that may be the catalyst to push the US dollar a lot lower and the euro higher. But the ECB aren't going to want to see the euro too much higher, in case it cuts off any sign of economic growth. It's going to price their EU exports very expensively. So Mario Draghi is going to, and the ECB board members will continue talking the euro down. Now, if we go and actually have a look at the dollar index, if I can find the dollar index, right, here we are. Now, this is a weekly chart of the US dollar index. Now, bearing in mind that the euro makes up 57.6% of that index, and then the yen makes up another just under, or about 13.5%, and sterling another 12%. So that's 83 something percent of the index, 83.1%. Now, the index, as we've said before, has closed the last two or three weeks below very important rising trend support. It's also broken down below the pink line here, which is the 200-week moving average. Now, it closed at 79.40. There's reasonable support down here in the 79 figure 10 area where these support lines lie. Now, but if we get below 78.70, which this line here, which is the 50% FIBO pivot of the whole move up from 72.6 up to 84.75 over the last over the last 4 years really. If we get below that, there's not an awful lot to stop the dollar index heading a fair bit lower, possibly down here towards 77. Now, the weekly indicators are not looking particularly positive. They are looking as though there's more room for the downside. And if we go out to the monthly charts, if I can pull the monthly chart up, which might take a second on the internet. Right, okay, so here's a monthly chart, and as you can see, the monthly MACDs are looking pretty negative. So I'm a little bit wary that I know a lot of people are looking for a base in the dollar and think the dollar's going to turn around later in the year as the US economy starts to improve. But right now, it doesn't look as though that's going to happen, and the market might be a little bit early in looking for something like that. But back to the euro on the day. I think probably looking for a range trade between 139.5 and the 100-hour moving average, I should say, is at 138.85, and down here we're heading back towards the 138.5. So I think 139.5, 138.5 might cover it, and it will be headlines coming out of Russia that largely dominate it today. Although, as I said, the FOMC is on Wednesday, and tomorrow we've got the ZEW Investor Confidence Survey coming out of Europe. Moving along to dollar yen then. Now, dollar yen at the moment, it's holding on to this 101.20 level. That's become fairly important. This is an hourly chart. If we go out to the dailies, we can see, or actually I'll go back to the 4-hour charts. We can see that that's proving to be some kind of support down here. And if we get below there, then the initial target is going to be down here at 100.75. The 4-hour indicators are looking negative, although they are becoming slightly oversold. The dailies, though, are slightly flat, although they might be turning a little bit lower. So I do think we've got to be pretty wary of this downside. If we break down below 100.75, then we've got this the 200-day moving average is down around here. That's at 100.3, and then below there we've got the 61.8% FIBO down around 99.5. So I think while Russia remains front and centre, the dollar's not going to be able to recover much. 102.28 is where the 100-day moving average is, and the previous support, which is now resistance, that's at around 101.80. So I'm not sure we're going much above there today. 102 looks to be a reasonable sell on the day, but it's all going to be dependent on Russia. Keep an eye on the Nikkei too. The US indices, the stock markets, they look as though they might be heading a little bit lower, and the Nikkei had a bad week last week, and that could continue in the coming days. There's not much action out of Japan this week, although the BOJ Governor Kuroda is due to make a couple of speeches later in the week, so those are worth watching. Sterling, well, that's chopping sideways really. It's between this, as I said last week, 165.85 and 167. I think early in the week, this 166.70 might cover it. Certainly, I'm not sure that we're going above last week's 167.15 high here. While on the downside, 165.70, 75 should cover it. The big day for cable this week is going to be Wednesday. What do we got? We've got the Bank of England minutes. We've also got the jobs numbers. The UK budget's due to be released, and also, of course, we've got the FOMC later in the day. So that's going to all push cable around a bit. Dollar Swiss is hovering pretty precariously above multi-year lows. It hasn't been down here since October 2011. It's hanging on at the moment. The 4-hour charts are a little bit inconclusive. It looks to me as though the dollar, if I'm right about the euro, then the dollar is going to head lower, and the this minor channel here, that's down around 86.80, so support there. Below there, then 86.40 is the base of the major channel, which you can see more easily on the daily charts, the red lines here. If we go below 86.40, I don't think we should stand in the way. I think the first port of call will be down around this 85.60 level, which is the 50% retracement or 50% pivot of the whole move up. If I show in the weeklies, from the lows down around 70.80. Up to 90, I think it was 99 somewhere or other. But yeah, so the dollar is looking as though it's heading low. The weeklies are not looking particularly healthy. So I think probably selling rallies in the short term remains the name of the game. And on the top side, it looks to me as though the recent high up here around about 88.15 probably will cover it in the short term. But overall, the dollar does look a bit. It does look soft. But as I say, the 4-hour charts are looking a little bit inconclusive. What are the hourlies looking like? They're not really showing as much either way as well. The 100-hour moving average seems to have capped it reasonably well recently, and that's currently at 87.5, so that's not very far away. If we do take that out, then probably see a move up to 87.90 or so. and as I say, the 88.15 recent high there should provide a bit of a cap on the day. The Aussie, well, that's where's the Aussie at the moment? It's trading at it's holding above 90. It's actually opened a bit lower this morning, and it's currently filling in a gap. It's moving back up to the Friday's closing levels, which were about 90.30. Any deterioration, of course, in the Russian situation, they'll see the risk-off trade come back into the fore, and a break of 90 could well take us back down here to that's this 89.90 level, back down here to 89.20. We need to watch out for the China fixing today. China widened the band from 1 to 2% either side of the peg against the dollar over the weekend. Now that any move higher in the fix today could put a bit of pressure on the Aussie, but I think largely it's going to be the Russian situation that's going to govern it, and also, of course, looking forward to the FOMC. Now we're currently tracking pretty close to the 100 and 200 hour moving average. That's at 90.20, so we might just hover around there today. Well, as long as there's no major headlines come out either way from Russia. As you can see, we're just filling in the gap here at the moment. The 4-hour charts are pretty inconclusive, and the dailies, likewise, they're not showing an awful. As the 100-day moving average is down here around 90.40 at the moment. That might provide a bit of a cap on the day. Now, I think the one thing to watch out for is I haven't lost all hope of this yet being a reverse head and shoulders. Now, if this neckline that I've kind of redrawn here, if that gets taken out, which comes in around the 91.40 area, which is the 200-day moving average, and where this descending trend resistance lies, then I wouldn't stand in the way. Above 91.50, I think we can easily move back up here to this FIBO resistance. That comes in at around 93.80. There's not an awful lot to hold it in between. This top here will provide some resistance, but that's at 91.50 as well. Above there's not an awful lot, and the head and shoulders target is actually somewhere up around 94.5, 94.75 up here. So just be careful of that. I think if we broke down below this 89.20 support level at any time, though, that would take out any thought of the head and shoulders working, and then we're probably headed back down to around these lows here. 88 figure. There's going to be support here around 88, 80, 88.5. But so in the meantime, I think probably a wide range trade. Use sort of 89 to 90, 91. Yeah, 89 to 91 is a range, and currently we're sitting right in the middle of it. So I'd trade either side of that. Finally, the Kiwi. Well, that's consolidating at 85.30. It's below its 86.05 high last week after the RBNZ rate hike, I should say. Now, with more rate hikes in line according to the RBNZ over the course of the next 12 months, I would imagine dips are going to be decent buying opportunities. But having said that, on the 4-hour charts today, the indicators are pointing a bit lower. But the dailies are still positive, although they may be reaching a bit of a peak. But further out, the weeklies look as though they've got some positive momentum behind them, and so I think we could potentially come up here and look at this previous top up here, which was at where was that? 86.75. If we take out that, then we're heading back up here to this sort of 88, 88.25 level, which that's from 2011. That's a long way off yet, and I don't think we're likely to head up there. In the meantime, the support and first FIBO support and rising trend line at around 84.75, I think, probably to provide some decent buying opportunities should we get there. So that's really about it for today. It's all going to be headline watching. There's not an awful lot out data-wise. But the Russian deal will develop over the course of the next 24 hours, and we could see some market moving headlines in the next couple of days. So that's about it for today. I think be pretty nimble. Watch the stock markets; they all look as though they're turning a little bit heavy to me, and we could see some downside there. and the S&P I think could be in line for a test of 1800. The Dow may be in line for a test below 16,000, which means that the Aussies probably got limited upside, and it possibly means that the yen's got further strength behind it as well. So that's about it for today. As I say, keep it pretty tight and have a good day's trading, and we'll talk to you tomorrow. Cheers.